Hello and welcome to our viewers on cruxinvestor.com. Today we're speaking to the new CEO of Pensana Metals, Tim George. He's going to talk us through their business thesis, and that is that the Chinese EV manufacturers have been told to diversify their supply chain, and we're going to work out whether that stands up to scrutiny or not. He's also giving us an update on their recent drill results from the press release, and we talk through whether or not management are overpaid in mining. If you want to watch more on these topics, please click on the timestamps in the description below. And for those of you new to cruxinvestor.com, please click the button in the corner of the screen to subscribe to our YouTube channel. Good morning, Tim. How are you?
Morning, Matt. Well, and yourself?
Yeah, fantastic. Well, thanks for joining us all the way from Cape Town, South Africa. Why don't you sort of kick off, give everyone a sort of reminder as to what Pensana Metals is?
Yeah, Pensana's got a project in Angola involved in the rare earth side of things, particularly on the focusing on the neodymium and praseodymium extraction, aiming to mine relatively soft rock deposits and concentrate it and export as a concentrate sale.
Okay, fantastic. Now, you're relatively new to the team, joined in April. Why did they bring you on board, and what are you doing?
Yes. Well, I had a phone call from Paul quite a few months ago now, and asking if I would be interested in the project. I have had quite a few forays into Angola in the past, back in the early 2000s and subsequent to that. So I've got a reasonable amount of history associated with Angola. I'm also a metallurgical engineer by training, if that helps in these rare earth projects. They're all different, so there's an awful lot of chemistry that goes along with that to understand. But the combination of that and the associated with my previous project history in terms of delivery on that front is why Paul was interested in me. And then I had a look at the projects back in April and thoroughly came to understand the potential there.
So we've got, I just want to understand, so Angola, Portuguese influence, Chinese influence of late, and also quite important to the UK. Is that right?
Correct. And actually, Angola is one of the most cosmopolitan African countries that I've ever been involved in, and I've been in quite a lot of the sub-Saharan Africa side of things. The oil industry has obviously attracted everyone from the Americans to the French, etc. Historically, the previous political dispensation attracted Russians and Cubans into the environment as well. South Africa has been in up there in various guises over the years as well. So it really is a melting pot of cultures, and it's truly cosmopolitan from that point of view.
Okay, so I just want to sort of cover up a few areas very quickly, just kind of set up the conversation, as it were. So just, if you may, just remind people what neodymium and praseodymium do. Where do they sit in the market? Obviously, it's to do with magnets, but what precisely are you getting into?
Yeah, I mean, the key thing here is the transformation of transport in terms of the shift away from internal combustion engines to the permanent magnet motor. And obviously, as everybody knows about the battery metals associated with that transition. However, the efficiency of changing electrical energy into motor power is largely determined by the strength of the magnets in the motors. And praseodymium and neodymium are by far and away give the strongest and most efficient reaction in that, from the point of making those batteries last longer on all the vehicles.
Right. So that's where it sits in terms of, so you associate yourself with the battery metal space and the EV revolution that's coming. People understand the sorts of numbers that have been quoted in lots of interviews like this, and lots of information about it. China controls 87% of the NdPr, neodymium, praseodymium market as it stands. There are a few other players in the market, Brazil, Russia, India, Southeast Asia, but not in large sums. I mean, you're positioning yourself as, you know, potentially a world-class size asset. Is that right?
Correct. I mean, as you would have gathered from the previous interview with Paul, the carbonatite deposit that's been found and explored and is currently the focus of the pre-feasibility study that Pensana has undertaken is a significant deposit in size. I mean, in fact, the infill drilling is only been done on a very small portion of the deposit, and investors may have noticed there was a recent release a couple of days ago which basically looked at the ongoing exploration potential associated with the deposit.
Yeah, I saw that. I liked the headline. It said Diamond Drilling reports spectacular results, and then which is always better than just high grade. So you're pleased with what you're starting to see from the assets? Is that? I think that's pretty much what it's saying.
Yes, very much so. I mean, this one of the attractive things to me as an engineer is the low-cost mining methodology associated with weathered material and right at surface. So from day one, you're into material that you can upgrade and sell. You're not involved with a long-term stripping operation ahead of operations commencement.
Okay, so I mean, I just want to remind people. So you were a circa $35 million Aussie dollar company. You've got some cash in the bank, circa what, 4 or 5 million? 5 million bucks at the moment. You've just made a statement. You've got a low cost operation. Does that mean you've got some kind of sense of what the capex is going to be?
Yes, we're building on that at the moment. As I said, I mean, most of the details on that side of things will be out in the PFS, which is due out in September, when we'll be really bringing all of the various aspects that are ongoing at the moment in terms of capex definition, infrastructure costs, the metallurgical processing side of things. They're all coming to a head. So over the next month and a half.
Excellent. So that's a kind of fairly early stage piece of work. You're then going to move on to get a DFS to kind of, you know, firm those ideas, those costs, the economics up. This $5 million that you've got at the moment, that's going to see you through to the end of the DFS period, or are you looking to raise money before then? That
funding there will see us through into next year.
Right.
Will see us through into completion of the PFS and beyond. We've already lined up quite a lot of optimization work and additional definition work on the mining and processing front to be able to accelerate the project from PFS in towards a far more detailed design process.
Right. Okay. So you said it's not critical. Does that mean you're sort of comfortable around your ability to go and get money should you need it to take you through to, you know, let's say the end of a DFS process?
Absolutely. Look, I mean, the last raise was relatively quickly in terms of its turnaround. It engaged key long-term investors who believe in the company and new institutions who've been following it and have increased their stake. Fidelity went up from 5 to 10% in terms of ownership during this last raise. I mean, that's in terms of their backing of this particular project is what we're particularly pleased and aim to build on.
So the investors for the last round, mainly institutional, is that what you're saying?
Yes, it was a combination of institutional, some support out of London to add to the ongoing Australian and Hong Kong base support that we've got at the moment, and a mix of institutional and high net worth.
So you say that's an endorsement of the whole EV battery story, which you're talking to the market about, and I guess they're seeing elsewhere.
Well, it was interesting, actually. The raise was against the backdrop prior to the real trade war, as it's been called, hotting up. So it was an endorsement of the project itself, as opposed to the environment that we were raising in. And some say we should have waited, but we'd already taken the plunge at that particular point in time.
Timing is timing, isn't it? You can, if you could tell the future, it would be great. So can I just talk about the asset? So what's the position of the asset? That's fully secured, 100% owned by Pensana, is it?
We have a partner, Ferringol, in the asset, who are the state concessionaire in Angola for, as the name might suggest, ferrous metals, non-diamondiferous, which is in the armor's realm. And they've proved to be very, very cooperative and enthusiastic about this project. The background in Angola is actually quite interesting at the moment in terms of moving towards a very facilitating environment for foreign investments to actually happen. They've made a strategic decision that they would like to diversify the economy in terms of its previous dependence on oil and diamonds.
Did they have a choice? I like the way you positioned that. Right.
Look, I think you go back in time in Angola, it was the breadbasket for Portugal in terms of agriculture and so on. There was, up until the start of the Civil War, there were various, from iron ore to granite and limestone, cement, etc., already in place. Obviously, the Civil War took its toll on those. And almost went to zero overnight in 76 and 77. And now, obviously, the oil side of things has been largely offshore, kept things moving along. And while those days were good, the proceeds were enjoyed. But oil, as we've seen, has struggled a little in the past couple of years, and therefore, it's been a bit of a catalyst for this process to accelerate. But I mean, back 15 years ago, when I was in Angola on the diamond side of things, this diversification was talked about, but it wasn't really enabled by the structures that were in place at the time. And that's what's particularly changed, and in my view, a big step forward in terms of where Angola is now, and also comparatively to the rest of sub-Saharan Africa.
Yeah. Well, let's come back to the question, which was in terms of ownership. What's that split between your partner and yourself?
Ferringol at 15%
right.
of the project.
Right. And what about the portion that you own? Are there any covenants associated with that? What are the liabilities or risks associated with your ownership of the 85%?
Well, at the moment, we are going through the permitting process to go and to achieve a mining license. That's underway. We've already initiated the environmental studies that are necessary, both to comply locally with legislation there and from an IFC standpoint. Those consultants are busy. They've done the wet season work, now moving into the dry season work on that. So that process is going forward to a conclusion towards the end of this year, and that will then basically we already understand the mining contract terms and conditions, and provided that it's supported by an economic feasibility study, the PFS will obviously feed into that in the next couple of months, then it automatically flips into an operating mining license. So I'm quite comfortable that the difference from 20 years ago, when there was a negotiation period between the exploration and the mining license in Angola, is now gone. It's seamless, and from a ownership and comfort and de-risking point of view, that seamlessness in that process is extremely valuable.
So the mining license and permitting process is underway. A PEA has happened. It has a bit of variance to it, plus or minus 30% usually. But the PFS due later this year will give some comfort around the assumptions that you currently are using. Can we get back to the kind of thesis, the strategy, and then the thesis right here. So the strategy for you is to build up a large rare earths business in Angola. Have you thought about what the end game is there? Or is it just get it ready for someone to take it into production, or you guys got the team on board to be able to do that?
Well, it's part of the reason why I'm involved. I mean, my history with Anglo, De Beers, and others has been around project implementation. I've been involved with feasibility studies through to mine execution processes, and also grew up in those operating environments myself. So I cover that side of delivery from conceptualization through to actual production. Myself, I'm able to build those teams up, and so we're quite confident about that. I mean, just pointing out on this particular project, we're not doing anything particularly complicated. Mm-hmm. We're going into soft rock mining and a relatively soft liberation process and a flotation process, followed by dewatering and shipping a concentrate. It's not complicated. It's designed around what is actually there. We have reasonable infrastructure there in terms of the access via road, rail, air, etc., to be able to be in and out of the project as necessary, and that's a particular aspect of Angola that has changed substantially over the last decade. I mean, the Chinese have built this or rebuilt the railway that used to do over 1 million tons per annum down from the copper belt.
So who owns that? Do they own that, or they just?
It's been financed by the Chinese, and obviously that debt has to be repaid. And so the likes of us coming along and putting up a processing operation that can then provide a revenue stream to the railway down to the port of Lobito, and then a revenue to the port of Lobito, which is designed for a much greater capacity than our operation will ever be able to deliver. So those sorts of revenue streams are obviously attractive to the Angolan authority.
And who built the port?
Well, the port has been there for many years. It has been refurbished again by the Chinese.
Right.
They put close on 4 billion between the port and the rail side of things in terms of upliftment.
Okay, I'm just trying to, if I may, just try and understand the answer. So the Chinese have built the rail, or upgraded the port as a infrastructure project, but they have no control over those other than, I guess, they're owed a bunch of money by the Angolan government.
Well, we've visited the port authorities and the rail authorities, and they're very much Angola.
Okay.
In terms of the administration side of things. So it's locally controlled in terms of how it functions and how it's managed.
I'm just trying to understand again liabilities, what influence or control Chinese may have further down the line should they so wish. And it sounds like you're saying that the Angolan government are firmly in charge, and that's not a concern.
No, it's not a concern. I think that the Angolan side of things has become particularly well geared to understanding what investment opportunities need in, or how investment opportunities need to be developed to ensure attractiveness to the investor. I mean, the oil sector, for example, is one of those, very mature in terms of the way in which concessions are granted, the way in which they're handled operationally afterwards. Obviously, aspects like localization are key in those processes, but in terms of secure revenue streams thereafter and marketing products and so on,
yeah,
they're very clear in the way those are laid out.
Okay. As part of this conversation, we've done a lot of research on your companies, a very good website. I encourage people to go and take a look at your website. Very, very clear communication. We need to believe three things will happen. We need to believe where NdPr sits in the EV revolution or evolution. We need to believe your thesis that, and you've made this statement in your PowerPoint again, the Chinese EV manufacturers are being told by the EV customers, presumably the automotive brands, that they need to diversify their supply chain. And then obviously thirdly, that you've got the ability to raise the capital to build this out for the CapEx. If I may come back to the second point, which is with regards to diversification of the Chinese supply chain. They have 87% of the market currently in terms of production. Outside of that, it's very fragmented. You're hoping to be one of the larger rare earths companies once you get into production. But what kind of pressure is on you or the Chinese EV manufacturers from the automotive companies in terms of timing? When's the expectation of this diversified supply chain?
Yeah, it's an interesting question. I mean, the question is at the moment at what rate the transition will happen. I think whether it starts in earnest in 2 years or 5 years or 7 years, it's a matter of speculation.
How much time have you got before the Chinese go somewhere else?
Yes, yeah. Look, I think there are a number of factors that play into this. Yes, there is a need for diversification of source material outside of China. The issue at the moment is that the bulk of the processing in production of the actual rare earth metals themselves still occurs on a vertically integrated basis in China, and that's going to take time to match that sort of capacity, or even over the next few years. Those industrial complexes do not appear overnight. So I think this is the start of a process, and it will move towards balance, as most things do in their natural cycle. It will provide opportunities for others to think about business plans associated with those. And once the demand starts picking up and the stability is there, then investment in those type of downstream processes outside of China will happen. So I think we're at the start of a road that has got lots of potential in it, even for a company like ours in terms of what may happen downstream later. But the point of the fact of the matter is, at the moment, that there are limited options in terms of offtake, and they're generally in China.
So have you been part of any of those discussions, or are you aware of the content of any of those discussions with regards to, if China's worth 87% of the market now, are they looking for, to get to 50% of the market as part of the supply chain, right? And how do you control that? Because there's a few, as I said, it's a very fragmented space at the moment. There's a few players, not of any note. what's the expectation or demands from the automotive brands themselves in terms of some of those numbers, or is that not determined yet?
No, it's that's not really been on my radar to date. Look, I'm aware of the need for them to demonstrate that they're moving away from dependence on China in terms of imports of those particular materials. I am aware of various companies that have pretty much said, we'll take whatever you can produce going forward. Again, recognizing that there are several steps in that value chain before you end up with metal that can actually be used as an alloy in those magnets, for example.
Given it's the kind of cornerstone of your thesis as to why your business will succeed, there needs to be a diversified supply chain for the Chinese EV battery manufacturers. What do you know? I mean, you've got a business, $35 million market cap business. What do you know around where this market is going in relation to you that gives you comfort that you're in the right space, you're doing the right things, that you're going to have those buyers there, the demand is there? I mean,
I think anecdotally the easiest response to that is that we are regularly questioned on when we will start producing and what grade of concentrate we'll be producing, and there isn't a shortage of inquiry on that basis.
From who?
Well, from particularly from the Chinese at the moment. They are recognizing that they have to look further afield in terms of being able to say we're not just solely reliant on our own internal production.
Right. So another interesting statement from your PowerPoint was the Chinese, very broad term, not interested in supporting a project that will become a competitor. What do you think that statement means? Or can you help us understand what that statement means?
Okay, I think if the further you move down the value chain, that's where the threat is. So once you move beyond producing a concentrate down into producing a carbonate or rare earth form or other rare earth form, and then towards moving into producing metals and so on, that's the aspect that the Chinese would regard as competitive behavior.
Right.
It's loosening the monopoly that they have at the moment. I mean, quite frankly, they're not wrong in terms of saying, well, we can switch the taps off and use it as a bargaining chip.
Well, that's an interesting topic. Let's talk about that, because that's the bit that interests me. And that's why I was asking about infrastructure earlier in terms of control factors in country. Chinese are big, influential in Angola and lots of other surrounding countries in Africa. But at what point, because you've said that you want to get this into production, right? At what point do the Chinese go, well, actually, now you've worked out what's there, how much is there, what the grade is, what it's worth, I think we're going to step in at this point and have a conversation about acquiring this, because that removes the competitor component or the ability to be a competitor. It secures control, which I guess answers the question of around supply chain diversification. And how much control do you have on that conversation? Because you are where you are in terms of market cap, you are where you are in terms of ability to access cash, and the Chinese, in broad context, if they're interested, they're coming in, aren't they? How do you control that?
Look, from a strategic point of view, it's one of the reasons why we're particularly pushing this project down the throats of institutions.
Right.
Some might argue it's a little bit early, but actually, if you're going to have a good chance of seeing this thing through to operation, then you need the support and to start developing that support as early as possible, because that is the crux of the matter in terms of making sure that the right ownership structure is in place, it's healthy, it's able to dig into pockets to fund the sort of capital expenditure that's required. We've kept this one in terms of its capex requirements low in relative terms to others, to ensure that it's balanced in terms of political risk, geographic location, etc., to make it attractive to that type of institution that can see it through.
But isn't that? I mean, the institutional players, the funds, etc. They're small players. Even Fidelity, 10%. That's not a lot of money for them, and this isn't a big part of their portfolio. Are you able to have conversations with other strategic partners who may come in with large, with large pockets, who come in with larger investments, whether it be at project level or the PLC level, or will the Chinese look at that and frown slightly? I mean, again, it comes back to how much control have you got here?
Indeed, look, I mean, the rare earths has been a niche market for some time. It's got a bad dose of reality a few years ago.
Well, I just
prices went up and prices went down. But I think the interesting thing here at the moment is that the stability and demand and the growth potential is attracting, obviously, juniors like ourselves to have another go at this particular niche. But some more of the strategic mining players are also starting to pick up and take notice of this as a potential aspect to their portfolio in the mining side of things. So it's not purely the institutions or the Chinese. It's also the larger mining corporations that are paying more attention to this than they have done for 20 years, probably.
But they too need to, coming back to the first point that we need to believe, which is around the EV revolution being here to stay, and where NdPr fits in that. As you say, rare earths has had a spiky journey over the last 20 years. It comes in and out of fashion, and there's quite a few commodities. I think the cobalt people will tell you, also battery metal will tell you, 2 years ago, life is going to be good, and they're down at a third of the price they were, 18 months, 2 years ago. It's unpredictable. What gives you the confidence that NdPr, and specifically Pensana, is going to be able to weather the storm, should there be one? And in fact, do you think there will be one?
I'm confident in terms of the market stability around pricing for the time being.
Right. I'm writing that down.
There are benefits to monopoly situations in certain circumstances in terms of price instability.
But do you think you're there? Because, like I say, if the Chinese control a large portion of the rest of the market outside of China is fragmented. That's hardly monopolistic control, which is good for you, is it?
If you're looking at benchmarking prices, then having that in the background is helpful, I believe, in terms of that level of stability associated with maturing industries in China. On our side, what the factors that are in our control is to make sure that we produce it as affordably as we possibly can, keeping maximizing the use of the great infrastructure that is right on our doorstep. I mean, how many other operations get to be 4 kilometers away from a railhead with a port just down the road for this type of activity? Angola has just interconnected its main hydropower schemes up in the north to the middle of the country again. So we've got green power, hydroelectric power on our doorstep on that side of things. It's
Yeah,
keeping the operation simple,
yep.
and as a consequence of that, the concentrate is going to be competitively priced.
Well, yeah, like I say, I look forward to seeing the numbers that come out with the PFS. You'll get some certainty around the economics, and as you say, one would expect it to be a very low cost operation. Look forward to seeing that. Now, thanks for running through that, and also lovely to meet you. I'd love you to help me with one of the other themes that we're talking about with junior explorers at the moment, which is around investors' concern over how junior explorers manage their overheads and how they keep costs low, and the importance of it within an operation which is pre-revenue. So, and we've had lots of feedback from various CEOs, giving us their opinion. How are you guys treating this? If we look at, let's take a really hot topic: salaries, remuneration, recompense. How do you guys tend to structure that? Are you front loaded? We're going to take it in salary and no shares? Are you back loading it and saying, well, actually, we totally believe in this project, I'll take more equity or shares, options, warrants, however you remunerate, but I'm happy with a lower salary? How would you position yourselves in the market?
A bit of a combination. There's a salary component which is market related, on lower than some, by right. a fair chalk, and performance shares on the long-term objectives. Over the 2-year horizon, we've set ourselves some fairly, aggressive objectives in terms of bringing this thing into production, and those performance shares are linked to that, and with some short-term incentives in terms of the immediate future, the 6-month horizon. So it is incentivized significantly, but nobody is going to starve in the meantime. And I think you have to have that balance in terms of making sure that people make the decisions for the right reasons in terms of the project itself. You've got to consistently develop a pragmatic process of achieving your objectives, and the worst you can do is kid yourself.
Yeah, no, it's just an interesting topic within chat rooms and forums, and I'm going to take the extremities of some of those comments out, but the fundamental thing is that yes, C-suite directors need to be paid for making important decisions based on their experience and their knowledge, but at the same time there's an expectation that they should be heavily rewarded for success. And like I say, those can be short, medium and long term, but there's no point in doing a peer analysis. I think one chap the other day said, I'm not in the top 200 list, but he was also comparing himself to large billion-dollar producers, which that's not the point. It's a case of, against your peers, is it a reasonable recompense? Seems to be what people are talking about, and sometimes the answer is no. But you feel that you've got, and it's all public information, but you feel that you guys have managed this accordingly for a 35 million market cap company.
I think so. If you look at the experience that's required in this type of environment, there are not that many people available for it. And from that point of view, it has to work for both ways. Your junior cycle of job security against when the next funding is going to come in, obviously also plays a role in that. There are a lot of external forces that come to play that you have absolutely no control over. And at the end of the day, if when you deliver, it is a significant uplift for the initial investors who come in at an early stage. So
it can be, Tim. It can be, but 19 out of 20 junior explorers don't make it, right? So it can be a significant uplift, but most of the time it's not, unless you're very good at picking the winners. And I don't know anyone, including myself, that is all of the time. And this is, you know, do you think there's anything to be gained by making sure that people or management is truly aligned? You know, because again, we spoke to a CEO recently who's on market cap similar to yours, on $600,000 a year salary plus incentives, and I can see why his investors that might stick in the throat a bit. But anyway, that's a conversation for another time. I just wanted your opinion, your views, and you know how you're going to treat this business going forward in terms of managing cost. With regards to G&A, salary is obviously a big part of it, and so some remuneration. But it's indicative of your attitude to how you're treating this.
Look, I think simple analogy from here. I mean, my location in terms of in and out of Angola is far more favorable, being on the same continent and 4 hours flight away.
Yeah.
And I don't fly business class, I fly economy up there. It's a 4-hour flight. That's the sort of, I'd rather see that type of money going into the ground than into an airline pocket. So that's my philosophy. And at the end of the day, I'm an engineer. I do want to make sure that there's a deliverable.
Yeah. Well, yeah. I mean, that's what everyone's looking for, and I guess in the next few months will, tell us a little bit more about what you're doing. I've got to finish on the question, which I still can't wrap my head around. 1.4 billion shares out. That the ASX has a love affair with large numbers of shares, but I'm told the Australian investors don't mind. Is that true?
Look, I think if you go back in the history in terms of what you're saying, 1 in 19 succeeds.
1 in 20. 1 in 20.
Those numbers are generally a consequence of previous exploration ventures that then need recapitalizing because they didn't go anywhere.
But you don't like to roll back.
Yeah. Look, I mean, we've just announced a consolidation because you're quite right.
It's getting up there. It's getting up. Well, certainly for retail investors, I think it's becoming I think it's a bit of a problem for retail investors. I think if moving forward, if you're going to be looking for liquidity and a bit more trading, because your institutional holders will be just that, holders. How are you going to drive that share price up without retail and encouraging them to come on board? So, I think doing a rollback or consolidation is, certainly something you need to consider. But Tim, I've really enjoyed that. Lovely to meet you. You've obviously been here a few months now, but good luck for the next few months. And do come back and talk to us.
Would love to do that, Matt.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.